And hello traders, and welcome to another video. So in this video I want to just break down some charts with you guys and really show you what you are going to be able to do after you finish all of the education, after you start working in your charts, etc, etc. So we are just gonna use the bar replay here, and we are going to break down the price action on AUDUSD. And yeah, we're just gonna talk about the trades that we had in this period of time, and I'm gonna explain to you, when should you trade, when you should not trade. And yeah, I'm just gonna show you an example of really how your charts are gonna look like after you finish with everything here. So yeah, let's get into it. Let's start it. So at the beginning, guys, we have saw that we have this massive momentum to the upside, and then price started to show us a little bit of weakness. So when you see the price action is breaking the highs and retracing, 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 this is an indication that the momentum is slowing down in the market. So after that, we saw that price broke the lows again, and right now price is breaking the highs. So when you see this bit of price action, it is not that clean to look for continuations. Okay, so when you are trading continuation trades, what you want to see is price action breaking above, showing us this nice momentum impulse to the upside, then retracing, okay, giving us a pullback, and then continuing. Okay, so we want to see that we had this break of structure only once. Okay, we had this break of structure, and price is indicating us that it wants to continue in this direction. Impulse, correction, impulse. This is how market moves. But when you see that we have an impulse to the upside, and then a retrace, and a retrace, and a retrace, we're breaking the highs, we're breaking the lows, and then we're again breaking the highs, this is not that high probability point of interest. Okay, so it will not be that high probability. Okay, guys. Also, as I told you, we are using order blocks a little bit differently. So you're gonna see where they mark this order block. It's not here. It's not this candle right before the momentum, when usually people are getting involved here. This is their order block. But for us, we do not look at order blocks like that. We are looking at where was the last retrace. So we're looking at the candle high. This was the candle high, this was the candle high, and we saw that we have a retrace, and it's inside bar candle as well. So if this was our last candle high, this is where our initial move started. Okay, so this is where we mark our block. Also, this was inside bar candle, so we do not mark this candle low here. Usually when we have only a candle, we are marking this candle low and this candle high. Okay, this candle high and this candle low. But in this case, because this was a retrace candle and this was an inside bar candle, we are only marking this inside bar candle. This is again allowing us to have, safer entry over the smart money traders and people who are trading usual normal order blocks. We have better entry, we have better stop loss, we have less pips in our stop loss. Also, when you're using inside bar, and this is going to automatically give you a bigger risk reward trades. So it's a small refinement that we do in hybrid in order to have better success of trading and everything. So yeah, okay, let's see what happens next. What price action did. We start to again have this massive momentum to the upside. After we saw this wick, we can expect, okay, most likely what is going to happen is that we're going to start range, or we're going to have a retrace. So we had the retrace, but price action is showing us it has momentum. It's most likely going to continue to break this high that happened. And again, immediately after we broke the high, we had another retrace. So again, guys, this is again your indication that momentum is slowing down in the market. Price breaking the highs, retracing, breaking the highs, retracing. This is showing us weakness to the upside. Okay, and we saw this momentum, this massive push to the upside that left imbalance and this unmitigated order block. So when you're looking at this, and when you're looking at the pair like AUD USD, you know that reversal trades are high probability to take on them. on this pair. So what you want to see is basically weakness to the upside, this standing price action, breakout, reversal trade to catch it, to fill this imbalance. This is called our high probability news pattern that we like to trade, especially reversal trades. They are performing really well on AUDUSD. So again, we're breaking highs, but again, after we break the high, we are immediately retracing. So again, a price action is showing us it's slowing down in momentum. And again, guys, this is where you're gonna know that this order block is not that high probability to trade from, you know, because you don't have enough momentum in the market to get involved in the continuations here. Again, price action breaking highs pretty impulsively, and the same thing right now is happening basically like here. Okay, so price action is breaking above, and it doesn't give us a clean continuation. Here as well, you have the same price action here, because a lot of people will look at this and they will look at this impulse and they would say, okay, this is an impulse to the upside, correction, impulse to the upside, correction, impulse to the upside. I'm gonna trade based on this order block here. And that is wrong. Okay, yes, you can do it, but your trades are gonna be automatically a little bit more risky. Why? Because you do not have a clean continuation. You have impulse to the upside, breaking the highs, breaking the lows, and then you're continuing. You're again breaking the highs, again breaking the lows, again breaking the highs, and then continuing. So it is not that clean like an impulse correction, impulse pattern. It's more like messy. Price doesn't know where it wants to do next, you know? Yes, we are in a strong momentum to the upside, but again, those are blocks that are coming from this bit of price action are not that high probability. Okay, guys? So again, another week and another retrace. Let's see what happens. Price was coming back a little bit aggressively right here. Again, continuation to the downside, to the upside, and we did manage to break the high. So yeah, let's see what happened. Again, guys, you could trade based on this order block right here, as you guys can see. But again, it's not that clean. It's a little bit risky. And AUDUSD, you know, I like to be more safer when I trade continuations on AUDUSD. So I'm looking for, you know, clean momentum and clean continuation when I want to get involved in a continuation trades on AUDUSD. Also, remember that when you're looking at continuation, guys, you want to see momentum, one impulse, retrace, a second impulse. This is indication that momentum is present and there is a continuation involved. And as you guys can see, we didn't quite had, you know, a second. So we didn't have the first momentum, first bullish leg. We only have a second. And basically this bit of price action, if translated, this is something like this. Impulse to the upside, ascending price action, and breakout to the upside. This is not high probability for AUDUSD. This would be high probability if you're trading Euro USD or Euro JPY. Euro JPY and Euro pairs in general love to do this when they're pushing above, making this ascending price action, and then, you know, they're pushing above again, and then boom, continuation, they're continuing to the upside. This is high probability for Euro pairs. You know, Euro pairs like to do that, but on AUDUSD pairs, we do not like to do that. We would like to see a clean momentum, a clean continuation with one leg, pullback, and a second leg. As you guys can see, you do not have a first leg here. This, but well, this is not momentum. This is not the first leg. And many traders will look at this and they will be like, okay, I'm gonna trade here for buy positions because I see this momentum, retrace momentum. But it's not like that. It's not clean. If you're looking at the every little detail on the chart, this is indication that momentum is slowing down to the upside. You have this ascending price action. You have a little bit of correction right here. So this is why we do not consider this as a high probability trade on AUDUSD. Okay, and a lot of people do not know this, you know, they're just trading what they're seeing on the chart. But again, this is why it's important to look at every little detail on the chart. Do your also pair characteristics so you know what is high probability on which pair and what not. Okay, so again, guys, we're breaking below, again breaking below, and here we have our double confirmation entry. So if you're a beginner and if you're new in the community, I would recommend you only to focus on hybrid pattern. Okay, do not look at double confirmation entry. Double confirmation entry is something that we added a little bit later on the strategy, so we refined the strategy a little bit. And if you are just starting with hybrid strategy, it would be best to ignore double confirmation entry and focus only on hybrid strategy. Okay, so first time what you want to do is backtest the hybrid strategy, do USR, make your trade plan, you know, backtest for the second plan with second time the same pair, same years with that trade plan. And then after you have done the backtesting on hybrid entry, then start doing backtesting on double confirmation entry, because this is how community did things, you know. And it's the best way to go. If you start to trade hybrid entry and double confirmation entry at the same time, it can get a little bit messy. Okay, so this is only my recommendation. You can do what you want, but I think it's the best way is to trade first hybrid, only hybrid pattern, focus only on hybrid execution, and then on a double confirmation entry. Okay, guys, so again, continuation trade a little bit more risky because this is AUDUSD. We had what I didn't like about this is we had this impulse correction. So we didn't have momentum in this impulse here. We had more of a descending price action. And again, this is AUDUSD, so you know, continuation trades like this are quite risky. But we had we had a lot of other confluences. Okay, other confluences would be that we had this standing price action that is indicating, you know, a reversal trade. We had this high probability news pattern formed. Price was looking at like it is gonna reverse. We had this we had this head and shoulders as well pattern formed. So we had a lot of confluences from the bigger picture that were looking really good, and the most recent price action was not that quite nice because we were coming back in this descending price action. So to trade from this here double confirmation entry, it would be a little bit more aggressive, it would be a little bit more risky. Okay, so yeah, it depends on the trader and their trade plan if they want to execute it or not, but you could execute it because you had a lot of other confluences, you know, based on this bit of price action as a whole. And most recent price action was a little bit risky, so you can combine those things. If most recent price action is a little bit more risky, but overall price action is quite high probability, you can take the trade. You know, it's not gonna be like, you know, a bad trade. It's gonna be just a little bit more risky trade. And let's say, for example, bigger picture, you know, is corrective, you know, ranging, not looking that good, but most recent price action is high probability, you know, 10 out of 10, then you can take again the trade. Is not gonna be not high probability, just gonna be a little bit less high probability because, you know, everything is not perfect. But yeah, those things you can combine together. So when you're looking at the overall picture is going to be high probability, but you know, most recent price action is not going to be high probability, so you combine those things and you have something in the middle. Okay, so basically, yeah, that's pretty much it, guys. So double confirmation entry here, price react to this order block, push the price to the downside, and I clicked a little bit too fast. So when we had this impulse to downside, we left a wick, we had a retrace, and we broke that. So we would manage our position. So our position would be here. We would lock profit. So we don't have profit target. We do not want to choose where we're gonna have our profit target. I do not like that because doing that we tend to have emotions. You know, sometimes we're gonna set it here, sometimes we're gonna set it on this zone here, sometimes it's gonna be sometimes it's gonna be like right here, and it doesn't have consistency, you know, it doesn't have rules. Again, if you do set targets like that, strategy is gonna be discretional. So this is why, again, hybrid is robotized and systematic as much as possible, okay, for you guys, because again, you are not making a decision where you want to get out of the trade. Market does that for us. Strategy does that for us. And again, guys, everything will be explained in future videos about trade management, scaling positions, everything. You're gonna have everything. Okay, this video is just for example, you know, what's gonna be like when you finish the strategy, when you finish the indication, you know, when you watch everything, when you start back testing, doing some work, etc., etc. So yeah, we are managing the stop loss with, you know, the trend. Price action is literally dictating where, you know, our profit target is going to be, where our stop loss is going to be, where are we going to get out of the market. We do not decide that for ourselves. Market does that for us, and that is going to eliminate basically a decision-making process out of your trading, and as well it's gonna eliminate a lot of emotions out of your trading. Because guys, again, remember, I mean, when you're trading the bigger capital, things can get pretty messy, okay? Especially when you have a bigger funds on your name. So you're gonna have a 1% stop loss on 200k account. It's gonna be $2,000 in one single stop loss. What happens when trade goes only 5% in your favor? Boom, all of a sudden you're making 10k. You're gonna get scared, believe me. You're gonna have fear of losing that 10k, because 10k is, I mean, pretty good, you know. It's really good money. So a lot of you guys are gonna get scared, you know. And then you're gonna be, do I quit this trade early? Where should I take profits? A lot of questions came in your mind. And with this, you have trade management and you don't care. Market makes that decision. You do not make the decision. It's gonna be really less stressful. Okay, so we would manage our position here. Market shows us this impulse correction, impulse pattern. It was looking quite nice right now. This demand was taken out. This imbalance was filled as well. We had a little bit of wick retrace. Let's see what happened next. Started to give us a little bit of pullback, and then we broke the low. As we're breaking the low, we are immediately again managing our position on the safest place that it can get. Okay, so our most recent low would be here, and usually guys, most recent high would be here. Yeah, when you're looking at this most recent low and most recent high, but because we had an inside bar candle, our inside bar candle is this high here. So it's basically, again, you're gonna learn everything when there's a trade management video and etc. But inside bar, we use inside bar as a supply and demand zones. We use our inside bar for, you know, trade management with scaling, a lot of things, entry points, etc. But yeah, because we had a inside bar candle, our high would be here, not here. Okay, so let's see what happens. Again, price action ranging, and this is where price action took us out. Again guys, most safest place is your stop loss being here. So it's basically, if market breaks this, it's gonna indicate to us that market has changed direction, and we are most likely going to continue to go to the upside. And this is why our safest place for stop loss will be here. Okay, so right now we can see a little bit of massive price action. What price action is doing is breaking the high lows, retracing. Again guys, breaking the highs, retracing, breaking the highs, retracing, breaking the lows, retracing. We see that market is starting to get a little bit messy, and we want to avoid this period of price action. We do not want to trade when the market is messy. We want to trade when there is a trend involved, when there is a high probability opportunities involved, when there is really good, nice and clean price action. Okay, and when there is a trend, when there is a corrective phase, ranging phase, massive phase, you want to ignore it. You want to protect your capital. So you want to shift your mindsets like that. When you see market is being good, is bringing you a lot of opportunities, everything is nice, clean, clear, this is where you want to be a little more aggressive, because this is where you're gonna make money. Okay, this is where you're gonna earn those percentages. And when there is a range, when there's a consolidation, when there is a correction in the market, when, you know, price action is all over the place, indecision all over the place, those times of uncertainty, you do not want to trade. You want to stay safe, watch it from the side, and protect your capital. Okay, this is how you're gonna have months. You're gonna have months when price action is corrective. You're gonna lose maybe 1%, 2% max, but you're gonna stay safe. And when periods of market is trending, you're gonna have massive risk reward trades, and you're gonna have beautiful opportunities. So this is how you're gonna maintain, you know, those profits over the long run, because when markets are bad, you're not gonna lose as much. For example, traders do not know this, and they're trading all the market phases the same. and when there is a market phase this bad, they're just gonna lose 10%. But you're not. You're gonna adjust your trading accordingly. You're gonna recognize those periods of market, and you're gonna adjust your trading accordingly. So continue with this price action again, guys. We saw this massive range, and again price breaking down below. Right now my question is, based on your knowledge that we've spoken right now, is this safe to trade, this supply zone? If you're looking at this, okay, market, this demand was failed, price actually is continuing to downside. We had this a little bit of range. Right now price, boom, is continuing to downside. Direction is, bearish. We have momentum to the downside. I want to take trades based on this supply. Wrong. Why? Because market was coming from messy price action. Doesn't mean you cannot trade it. You can still trade it, but it's less high probability because it's not clean impulse correction, impulse continuation. It is coming from this messy bit of price action. So let's see what happens next. Price again ranging, breaking the lows. Okay, so what is happening? Let's see. We're breaking the lows and retracing. Breaking the lows with the wick, rejecting the lows, and immediately retracing. Okay, let's see what happens. Where is let's see what happens next. Where is again we're breaking the lows, retracing. Again, wicks all over the place. Right now I think we're breaking the highs as well. Yes, we're breaking the highs as well, and again retracing. And again, guys, this was our most recent low because it's NC bar, so we are again breaking the lows and retracing. So we didn't have a retrace yet. Let's see. So again we're breaking the highs. We're breaking the highs. So this again is showing us a massive price action. Price was having this massive price action. Nothing was clean. So again, this supply zone is really bad to trade from. Okay, and right now we saw a continuation trade here, and again the continuation trade was not the best one. Okay, but when you're trading continuations, again, this is the continuation you want to trade. Impulse, correction, impulse. So this is valid continuation. Okay, so you have impulse, you have one leg, one bullish leg, one momentum, then you have a retrace, those two candles here, and then again you're having another continuation, another impulse, breaking this structure pretty impulsively. So this is valid continuation that you want to take on AUDUSD. The bad thing about this trade was that it was coming back from this corrective price action, but we had a lot of good things as well. We had this supply being taken. Okay, supply failed, so this automatically supply to demand flip. Demand was in control. We also had I think some imbalance right here. Another bad thing was that we were reacting from this supply right here, but again, I do not consider this supply as that high probability. Why? Because after this supply was created, we start to break the lows, break the highs, break the lows, break the lows, and we didn't had a momentum to the downside. Okay, but still we know that a lot of traders are looking to sell here, so that was another bad confluence about the trade. So the bad confluences were that you were reacting from this supply, and we were coming back from this descending price action. And again, based on this structure, again price was in a overall downtrend. But it depends how you're looking at it. If you're looking at it like impulse and descending, this is basically impulse descending, and this was a momentum push up for a reversal trade to continue to the upside. So you can look at it both ways. But yeah, the trade was valid, continuation was valid, and let's see what happened. So we had a pretty nice retest. We didn't had volatility, so that's really important. We had this low and then a retrace in another low. So this second bullish momentum coming back to our block was a little bit aggressive. So again, trading against momentum is not that good idea, not that great idea. So, but again, it's still, you know, it's still overall corrective. You know, pullback is good, but the second leg was not that great, and that almost resulted in a stop loss. Almost resulted in a stop loss. I was live in this trade, by the way, so yeah, I felt this. But yeah, price didn't took us out here. We have saw this massive momentum to the upside, and basically after we broke this supply, we started to show this big wick. So at this point, the trade was looking pretty good, and then all of a sudden a big wick. So after the big wick, you can expect the worst. Basically, you know, again, two things happen after a wick. So either price action is gonna range, and that's gonna be good, you know, because wick is gonna be respected, or you're gonna see volatility, and volatility is gonna be completely, you know, something bad. Or yeah, momentum can be high and we can feel this week as well, you know. This is the third option. So let's see what happened. Price retraced it, then we had a little bit of range, and then price again broke this high pretty impulsively. So again, indication of momentum, that momentum is present. Again, guys, our safest place, our stop loss was on the safest place right here, okay, below this NC bar candle, below this most recent low, and below this basically new demand zone created. Okay, so again, why is this a demand, guys? It's basically we broke this most recent high, perhaps not that pretty impulsively, but we had a momentum, we had imbalance, so this is considered a valid order block right here. So we had a scaling position here. I'm not gonna talk much about scaling position, guys, but basically when you're in the trade, and no matter how price action, so price action was not looking that great here again. So price action was breaking this high and retracing, breaking this high and retracing. So it was more of a ascending push to the upside, you know, no clear momentum and breakout of this previous high impulsively. So we didn't have enough momentum to continue to the upside. So it was more of descending price action, and descending price action is indicating a reversal, okay? But we had this inverted head and shoulders, and we were in the trade. So when we are in the trade, we do not care if we are at break even or above break even. We want to take a scaling position. So it is not, it doesn't, scale when you take a scaling position, it doesn't really depend of what market wants to do, what price action is there. So when you're looking at the entry, of course, you do not want to take shit entries, aggressive entries, etc., etc. But when you're scaling in position, then this is not out of the question. Okay, so you're looking at the math behind a scaling position. You're not looking at either the trade is high probability or not. So you're gonna see price was coming back aggressively right now, pushed the price up, and then came back on volatility aggressively. But I took a stop loss. Okay, so you're gonna see I took the scaling position. Why? Because I need to. Okay, I'm locked 2.9%, almost 3%. So I'm in profit no matter what. The worst case scenario, I'm in profit 3%. Okay, and with the scaling position, that's another scaling position, and that's full minus 1%. So if price action tags me out of this position, I'm gonna still be winning. So worst case scenario, in this position I'm gonna earn 3%, and in the second scaling position I'm gonna lose minus 1%. So my total win, or worst case scenario, my total win is gonna be plus 2%. So that's the worst case. And what happens if price action respects this, and price action starts to give me this momentum to the upside? Momentum to the upside. Right now, I'm earning with the first position a massive profit, and also I have a second position that's also earning me money. So this is why when you're scaling in the position, if you're above 1%, you really do not care about the price action, volatility or not, aggressive or not. You're focusing on the math behind scaling in a position. Again, guys, we do what we need to do. You know, the point is, when you win, you want to win big, and when you lose, you want to lose small. So it's basically not depending on the price action if you want to take a scaling or not. It all depends on the math behind it. So even if the trade was shit, I know that my job as a trader is to take a scaling position here. So as you guys can see, price give us an entry here, and then boom, took us out. So again, I'm showing you the most safest place for a stop loss. Again, look at what happened next. Momentum was too high, and boom, price just started to go to the downside after weakness to the upside, and yeah, just started to fill all of these imbalances and all of this liquidity, and price just gave us an impulse to downside, guys. Again, a retrace after this big wick. We can expect a retrace and a little bit of pullback. Again, price action ranging, liquidity above, liquidity below. What happens? A sweep to the downside, upside, and then boom, sweep to the downside. This is why I do not like to trade ranges, because they're full of manipulation. And let's see what happens next. So we had this massive impulse to the upside. So this was our this was a double confirmation entry, guys. You know, impulse to downside, retrace, impulse to downside, big wick. And we were coming back pretty aggressively to this order block. This would be a hybrid pattern. And again, guys, if you're just starting out with the community and everything, I would recommend only to focus on hybrid pattern, not on double confirmation entry. This trade was on double confirmation entry. I'm gonna just showcase him because I'm breaking down price action. But again, if you're just starting out, you should backtest double confirmation entry after you have backtested the hybrid entry. So for hybrid entry, this was a bad trade. Again, we had this impulse, continuation impulse. So impulse, correction impulse. The continuation was pretty good. But the bad thing was this big wick. And again, two things happen after a wick. Either we have a range coming back to this order block, and then it's high probability trade, then wick is respected. Or we have a volatility coming in our order block, and then we know that the trade is bad and aggressive to take. So this is why we are ignoring this first order block, hybrid order block, and we had a volatility here. So if we got in the trade right here, it would be again aggressive, and we would not take it. Why? Because, oops, sorry guys. Why? Why? Because market was coming back aggressively to this order block. So look at this momentum downside, price pushing down, and then the same momentum coming back. So it was again going against momentum. But as you guys can see, we didn't had our entry here. So price action was ranging, and then again we started to make this double top, equal highs liquidity, and price action just taking all of this liquidity, giving us double confirmation entry here. Then it was nice and high probability to trade it. But in first, if we got triggered in the position here, it would be aggressive. But after all of this price action was played out, after this wick was respected, and we made this liquidity before our entry, and this liquidity, because again, we have liquidity right here as well, a lot of liquidity as well, then all of a sudden the trade is high probability. This is why you should never stop forecasting. You know, sometimes it can happen that you're looking at this and you're looking to get involved, and then you see price action coming back aggressively to this order block, and then you tell yourself, okay, I do not want to get involved, this is aggressive, you know, momentum is not on my side, I'm going against momentum, I do not want to do that, I'm just going to ignore the trade. And then you leave the charts, go spend some time, I don't know, doing whatever, and then you come back and boom, you had an entry. You know, so it didn't happen pretty fast here because we had a lot of candles, but sometimes it can happen. So always, you know, watch out for those things, because all of a sudden this trade, it was not high probability, all of a sudden, boom, right now it's really high probability. So, but yeah, guys, this is a double confirmation entry. Basically, you do not want to get involved at the beginning. If you're just starting out with the community, you know, do not focus on double confirmation order blocks. You know, it's better to have fixed order blocks because you're never gonna be guessing Okay, this is why hybrid strategy is high probability and good for traders, because everything is robotized and automatic. Okay, everything is systematic for you guys. Entry, you know what is valid, what is not valid. If the entry is not valid, you do not take it and you do not care. You do not guess, oh, should I trade based on this supply or this supply or that supply or this demand? Whoa, all over the place, demand and supply zones. No, you have fixed order block that you can take your trades off that are valid, and you have those that are not valid. And you know, everything is robotized for you, and you can, most importantly, trade based on probabilities. Okay, this is the single most important thing that you want to do when you're trading. Trade on probabilities, not on guessing and factor of luck. But again, guys, if you're starting out, just focus on the hybrid pattern. Ignore double confirmation after you're advancing, you know, with education, after you have done your backtesting, ESR, and all those things that are really important. Then you should be backtesting double confirmation entry. You're going to see that double confirmation entry is basically a little bit of refinement of the hybrid strategy, because, for example, this trade here would be aggressive to trade, you know, and we would not take it, and then we can save 1% out of that. We do not trade it, and we trade on this order block, but that's the max as we go, you know. So this is our valid order block, first order block, and this is our second valid order block, and the rest we just do not look at. Okay, so we do not care. So it's basically going to give you it's gonna again eliminate decision making process after you're trading, because you know what is valid, what is not valid to take. You know, the strategy is doing everything for you. Your entry, you know, basically you can go and back test it, make a trade plan, stick to it, and your trade management is also fixed. Market decides where it wants to take you out of the trade. You do not do nothing. So a lot of emotions are eliminated from your trading, and a lot of those decisions are made by the strategy, not by you. Because again, you know, when we're trading, we need to make decisions, and those decisions can sometimes, majority of the times, be emotional. So yeah. After we broke this low, again, we retraced. After we broke it, our safest entry would be here, right above this newly created order block and above this high. So again, the same thing, we retraced, made a wick, broke, so our stop loss would be we would manage our stop loss here, and this is, I think, where price tagged us out of the entry. So that's pretty much it on this video, guys. I just wanted to do a quick, you know, chart breakdown to show you you know, the period of the market where, you know, market was really nice, you know, having a lot of opportunities, because this is basically where you want to trade. This is where you want to, again, execute the trades a little bit more aggressively as well. So and when there is a market phase, it is pretty corrective range, price action just consolidating. You do not want to get involved in it. Again, guys, you want to protect your capital. When the market is full with opportunities like this, you know, it's showing you momentum and all the interesting things. This is where you want to get a little bit more aggressive, even with entries. So yeah, this is pretty much it for this video, guys. Just showcasing, you know, charts, the strategy, and all of the things, you know, combined together. This is how your charts and everything is gonna look like when you go through the education and finish everything up. So yeah, hope you liked it, hope you enjoyed it, hope you learned something new, and yeah, speak to you in the next one.